Speaking to local and international investors, we find that there is currently a burning issue that is taking their attention with regard to the South African equity market. And the key question is, why is the South African equity market hitting new highs after we had in August of 2012 situations like Marikana? We're having a growing current account deficit. We're having a weaker currency. So there's a lot of bad economic news. Politically, there's also uncertainty. Yet our market keeps going up and up. This question needs to be understood in the sense of what is our market. And typically people look at the all-share index as a proxy, which is the largest companies in South Africa, as a measure of how well our stock exchange is doing. Now, it is important to realize that the market index is actually made up in South Africa of some very large companies that have got nothing to do with South Africa, but they happen to be in our index. So companies like Anglo American, Billiton, South African Breweries, Sasol, Richmond, British American Tobacco. These are all companies that make up nearly half of our total market capitalization, but are global companies. And what we are seeing is the international sector that is doing the best is large cap emerging market companies, of which these companies are part of. So it's actually not a South African effect that we are seeing. It's not that our South African domestic companies are doing very well. It is the South African international companies that are doing really well. And if you strip them out of the performance, you will see that the South African market has done a lot worse than what it appears to have been. So we need to focus on that effect, that what is driving our market the most is actually a global effect. It is people that are internationally investing in emerging markets, and we have some big players in that space that just happen to be in our index.